Hello everyone, and welcome you to this amazing webinar brought to you by the Soltesz Institute. My name is Viktoria. I will be your host today, and we're going to discuss instant payments, a roadmap of 2025 and beyond. And I'm very honored because Marcia Klingensmith is here with me. She is an amazing expert in instant payments, and I'm happy that she's sharing her expertise today with us related instant payments and adding her expertise to the webinar. So welcome here, you, Marcia, and thank you very much for joining us today.
Great, Victoria. So glad to be here. Hi, everybody. I am Marcia Klingensmith. I'm known globally as the Instant Payments Maven, CEO of FinTech Consulting. And my journey to instant payments began a few years ago when I was at FIS. I was responsible for the delivery of the managed service instant payments solution, the tie to the clearinghouse real-time payment network. And I led the tech team, the go-to-market, and took the banks from idea to delivery. And it was as part of that journey of building the pipeline that I realized that 75% of the banks I talked to weren't really aware of instant payments and the value that it brings to them. So that was a really eye-opener. And given that 72% of the world is enabled for instant payments and 68% of our Americans live paycheck to paycheck and 82% of businesses fail due to cash flow challenges, I felt it was very important for these financial institutions to be aware and get connected to the network so they could stay relevant to the communities that they serve. So after my time at FIS, I took this passion on the road and I built out my fintech consultancy. And so I've been helping a lot of financial institutions navigate the journey of instant payments and ISO 20022, which I'm now calling the financial Rosetta Stone, and also helping them on their payments modernization journey. So really excited to be able to share those insights with you today. So let's dive in.
Well, thank you so much. What an experience. I'm very excited about instant payments because you bring all that knowledge and wealth of expertise from the US market and obviously the global effect on that. And it will be very, very interesting to see that what are the similarities and the differences between the US market and the European market. And I can see that the whole world is going towards instant payments. So like it or not, we have to deal with that. And that's why I was really excited about having this webinar with you today, because I feel like that there are still not that many forums when we are discussing all of these nuances. Financial institutions know that the regulation is coming. European Union introduce that as a mandatory, so it's not a choice but more of a force, mainly in the European financial institutions, to implement that. But there is still not that much of a content out of that what are the real challenges, and obviously when there are challenges there are benefits as well. So how can companies benefit from this instant payments? How can financial institutions also turn this to their advantage? So it's very interesting to discuss this with you today. We collected a couple of questions, but I would like to encourage the audience to ask questions as we get along, because at the end of the session there is going to be a little Q&A session as well with your questions. So if anyone has any kind of immediate questions or something which is coming up through the webinar, please do share this with us, because we can make it as interactive as possible. But we collected a couple of questions which are the main questions which are leading the conversation today. So Marcia, why instant payments and why now? So what's happening that now we are talking about it? Why didn't we talk about it 2 years ago, and how does it affect us today?
Well, I guess, Victoria, it's not something that's new, but I think the biggest driver, what we're seeing is in Europe, it's instant payments has been around for more than 10 years. And now there's the European regulatory change where SEPA is being mandated, SEPA Instant Payments. So SEPA Instant Payments is a lot like our US instant payments. In the US, so I'll talk first about the US because that's my home turf, and then we'll talk about what's going on in different parts of the world. In the US, we don't really have the government driving a mandate for it, but we do have two sets of rails. We have the clearinghouse rails, which have been around for 6 years. We have the Federal Reserve rails called FedNow that's been around for a little over a year now. So we're just hitting the 1 year milestone. So in the US, we're adding about 100 financial institutions to the network a month. And so that's good, but that's not the exciting change that we're seeing in other parts of the world. So our two poster children for the possibilities of instant payments are PI in India and Pix in Brazil. Those two rails are growing at exponential rates. I think they're like the poster children for what the possibilities are. UPI came first, and it's pretty ubiquitous now in India, where even just like little street vendors will have a QR code. People can just do a purchase. They'll scan the QR code and do an instant payments transfer to their bank. So this has been really empowering for these small merchants to be able to grow and do a lot of business and transact. And it's just so convenient now that people don't want to pull out cash, they just want to pull out their phone. And in Brazil, what we're seeing is, like, it was introduced during COVID, and the growth was exponential. It overtook credit cards and debit cards now. So I think it's kind of like preferred choice to use a QR code. You go to a merchant, you just scan that QR code, and you can make a payment from your bank account in real time. So it's really empowering. One of the things it's done in those two countries is it's helped folks that weren't in underserved. It's like a financial inclusion tool. Folks that weren't in banking are now in banking. Businesses now, they're able to take more payments so that they can grow more rapidly and expand. So it's good for the consumer and it's good for the business. And so pivoting just to Europe with this new mandate, for the last 10 years, they didn't see the traction that they really wanted because SEPA was, the instant payments was more of a high-end payment tool, so it had a higher cost. Not all the banks had it. So now with this new mandate, they're mandating that it's going to be more affordable, that the price cannot exceed the charge of a classic credit transfer. So it's going to be more affordable. And now all the banks will have to offer it. So we have the receive date will be coming up this January. So that's just around the corner. And send, where the value really is going to be for these financial institutions, because once you start offering send, you're developing your full portfolio of offerings, and now you have the opportunity to innovate and monetize. So that mandate is going to go into effect in October. So I think this is going to be a really exciting time in Europe, because now it's going to be accessible to everyone. We're going to be able to start seeing some transactions for merchants. Merchants is going to be a great use case, your consumers, your P2P, and then businesses will be able to start integrating into their AP, AR, and ERP systems.
Yes, and it's very interesting that you mentioned that Pix in Brazil and UPI in India. Let's go back to there a little bit, because I know that UPI was also a government initiative. So it was really introduced by the national payment system of India. So that was not a private entity which was introducing this system. And we have seen that it really affected the economy in a positive way. So we can see that since the trust somehow is now eliminated from the payment process, because I don't need to know you, I don't need to trust you. The payment is instant, so we can do the business instantly. It really changed the habit of how businesses are transacting with each other. And everything, it's obviously started with peer-to-peer transfers. You know, you're going out with your friends and you share a meal and you share and this is how it actually got introduced more and more on the business narrative as well. So I expect this that we also had something like that in Europe. Started with Revolut. That was one of the main provider who introduced that a couple of years ago, a lot of time ago. And what I noticed in the customer habits, that the peer-to-peer transactions were the first one who used it. It was very convenient. You guys have Venmo, for example, in the US, just to send each other money. I don't need to know your bank details. Immediately it's there. And it was such a likable function that's how it got implemented more and more in the business world. And now what I can see that there is a big effect on the economy, because people people are more likely to transact with each other if they see that the payment is instant, it's there is no delay on that. So definitely that one of the positive facts. To the second question of like why now, I think as you very well said, Marcia, is that Europe is mandating the financial institutions that they have to offer this to all their clients. And what I'm thinking is that maybe that could be some kind of competition of innovation with the card schemes. I don't know, but there is something, there's a question later on where we can deep dive in this topic a bit more. But it's definitely good to see that Europe also wants to have a piece of that pie, which is now all over in the world, is this technological innovation where people can transact value immediately. And that's how much it affects the business habits, the customer preferences. So it is definitely interesting to see. Let's get to the next question, where we see that what are the key factors driving an accelerated shift towards instant payments. And I think this is something that we started to discuss here. That I would be really curious about your opinion. That what are the key factors for this accelerated shift towards instant payments?
Technology has come a long way. Banks have been bemoaning their legacy systems for decades, right? We have these mainframe servers that do processes in batch. They were designed originally based on the 16-bit system, right? Like batch processes happened because you needed to conserve transaction energy. You would put certain transactions that would happen overnight. And our legacy systems have just been so cumbersome. But the cool thing is we have a lot of new capabilities. Financial institutions are finally embracing cloud. They've been doing that for the last couple of years. It took them a long time to get to that point where they said cloud was an acceptable infrastructure. So now we're seeing this shift to cloud. We have APIs that enable these financial institutions to pull information from various sources and to be able to analyze data in real time. We have massive amounts of data, and that's growing every day. And data helps us provide those personalized experiences in real time. And then AI helps us analyze the information. So it helps us, we're talking about trust. AI helps us look at the customer that's being presented in front of us, look at everything we know about that user, about that device, about that interaction, and be able to have confidence that you've got the right user in that interaction, and then be able to execute a payment in real time. So there's a lot of these technology components that have really come together to accelerate the ability to offer real-time payments. So that's just one of the elements. I don't know if you can go back and forth. I think customer expectations is already there. And of course, we talked about the government drivers. Yeah. I think in India and Brazil, government was definitely a key instigator there, but I'll let you talk a little bit more about what you're seeing also from what are some of those drivers.
Yeah, I think it's interesting because customer demand is definitely one, because I think Europe with the mandating the instant payment realized that they cannot be left behind because the whole world is innovating and changing, and Europe is overly regulated in the banking sector anyway. So if they don't force it, the innovation might not drive the market quick enough that Europe can actually take all the benefits, what we have seen in PIX in Brazil and in Latin America, as well as UPI in India, and obviously the FedNow in the US. So I think Europe just realized that there is definitely a customer demand, but there has to be some kind of force from the regulatory perspective as well to drive this innovation. And this is quite unique because the regulator usually is not really forcing individual companies and private companies to innovate unless there is a big need. But we have seen that with open banking as well in the UK quite a couple of years ago, and now with the instant payment. So it's something which is surprising, but comforting that regulators definitely want to see that the market is going forward. You're absolutely right on the technical elements. I think it's absolutely fantastic that today we have all this technology which allows these kind of instant payments, because even a couple of years ago, instant verification could have been more burden than it is today. So now I think the technology reached a point when we can confidently say that that, yes, we have all the fraud tools and the payer verification, everything to be able to execute all of these payments instantly. So I think it's definitely a plus. The innovation is something that you cannot really stop. And if you snooze, you lose. So I think this is what we see here. Yes, made that's the key.
I think there's two other elements. Like, 'cause one of the values we were talking earlier about is the opportunity to drive revenue, and it's your customers. So it's not only about the opportunity to innovate. You mentioned we talked about the fraud tools that are available. So this is a very secure rail that allows for consumers to move money in real time. So some of the value that it brings, I think the other elements that are driving it is customer demand. So for example, what we're seeing today is, especially in today's current economic situation, is there's a lot of people living to paycheck. And when you're living to paycheck, you need to have full transparency to where your funds are at every minute and have full control. So if you, for example, if you have your rent coming up in a week and you're a little bit short, now you have the opportunities like, well, do I take a gig job? That gap? Am I spending? Do I need to take a microloan? Am I going to close that gap? And the great thing about instant payments is when somebody takes that gig job, most of those gig jobs are paid out in instant payments, and that money is in their account, and they can keep filling up that bank account until they hit their target, right? So it gives them that control. And then the other nice thing about instant payments is the ability to pay your bills on your time. So maybe a utility office is only open during weekdays, but because instant payments is a 24/7 service, if your bill's due on Sunday, you don't have to pay it on Friday. Now you can work all day Saturday, and then Saturday night hit the little button to say, oh, I'm paying my utility bill because I have enough money in my account. So it's really an empowering tool for a majority of people that are struggling financially. And then when we think about businesses from a small business perspective, small businesses are empowering the world, right? That's where most of the jobs come from. That's where the economy grows from the small business perspective. And small businesses are actually in the same place as consumers, right? They're living paycheck to paycheck. I need to get paid from this client so I can go to this conference event or to buy these goods so that I can manufacture more products. And so when you have instant payments in your offering, especially in the UK, they have the request for pay that is part of the service. We have it in the US, but it's not as broadly adopted yet. In the UK, with this broad adoption, businesses will be able to invoice their customers, get that payment in real time, both the sender and the receiver will be able to look in their bank account and see the money. So it'll be much easier to do that reconciliation for those businesses. And so they'll be able to have confidence in their funds and be able to make those purchases and to keep their business growing. And then from a big business perspective, they're not like the immediacy of payment isn't as critical, but I think one of the value props that you get with instant payments, because there's transparency, certainty, and control, is that there's also the rich data of ISO 20022. And I envision a world where when these big businesses are transacting, they'll be able to do these payments in real time, and with AI and APIs, they'll be able to analyze the transactions. They'll be able to do the automated reconciliation. All the information about that payment will be in the message. And so the business folks doing the reconciliation, they won't have to look up in various systems to figure out what's going on. And then, of course, there's the whole ability to now, with payments going single, one at a time versus batch, it becomes much easier to analyze those transactions as well and put your fraud rules and be able to detect fraud trends. So there's the technology element, the human element, the innovation element. So there's a lot going on here.
Yes, and definitely, for example, from the risk perspective, that's also important to mention that you are not waiting for your funds to be idle somewhere else's pocket, because you have the access of the funds instantly. So that's also something which is a massive risk elimination factor when it comes to maintaining a healthy cash flow, that you don't need to wait for your own money. When we are mainly talking about larger businesses, at any given day, there are millions and millions in transit just because it was sent at the end of the business dates. It's not 24 hours. The money has not been cleared, but it's already left the account. So there are a lot of money in transit as we speak. And then obviously it has a massive risk element for the recipient that if you're not getting the money on time, then how does it affect your overall risk profile? So that's also something which is it's
And
important.
just to add on to that, I love that because one of the things that we see, even with H, is if there's a delay in payment from when the money is sent to when the money is received, that somebody is underwriting the risk exposure on that send and receive period. And that's where a lot of fraud happens, in that little gap. And bad guys know that this money is in fluctuation, and so they'll pull their money and run, or execute other transactions. And so by reducing that window, you're reducing your risk exposure. So that's definitely something, we're talking ACH or checks, it's a great tool to kind of eliminate points of risk exposure.
Definitely. That counting records as well, because how are you recording for something and closing, for example, a period or a year when the money is not in your account? So that's also like an extra step in accounting as well. But I'm just mentioning that I'm an accountant, so
Exactly. I think there's just so many benefits. Like, it's hard to enumerate them all in the course of it's a 40-minute. Yeah.
So what do you think, Marcia? Can instant payments help banks to compete against the fintechs? I would say yes and no. It's like a double-edged sword, but I'm so curious what you're thinking.
I think this is kind of a trick question. This day and age, I think we've gotten to the point, like, it used to always be banks against fintechs. It was just like this horrible competition. What I think we've seen over time is it's really not a competition. I think, like, the value add on both sides of the equation. Banks have been in the industry a long time. They know what the regulators are expecting. They want to be responsible with people's money. And so they have all of these controls and bureaucracy in place. Sometimes gets frustrating, but really, like, somebody who has money in a financial institution, like, I want my money to be safe. Like, I want them to be doing all these checks and balances. I want them to be doing the right thing. And then fintechs, like, all about the great user experiences. They're all about the speed and the quick delivery, but they don't necessarily have all that experience that the banks have on, regulators come down on them. So, like, I don't think it's one or the other. Like, I think there's an opportunity to really marry the two and to provide the best of both worlds. Like, the banks can help the fintechs with their oversight, and the fintechs can help. So, in the context of instant payments, what we're seeing is that because the banks are dealing with these legacy infrastructures, their path to success is going to be through these fintechs. So there are a lot of what we're going to call TPSPs, third-party service providers, that have solutions out there to make it really easy for financial institutions to connect to the instant payment rails. And so in the US, and I imagine it's very similar in Europe, is that a financial institution can work with one of these third-party service providers, and the third-party service provider does all the heavy lifting, gets connected, puts the bank's core and connects to the instant payment network. And the bank on their side, it's more about, like, payment, figuring out their operational processes and figuring out their strategy, like customer they're targeting, what kind of value-added services can they add to the mix, how much are they going to be charging. And in the US, like PSPs, these fintechs are getting banks on to the instant payment rails in like 2 months for receive and maybe 3 months for send, maybe longer. It kind of depends on how ready the financial institution is, but the fintechs, they can make it happen fast. And they take these legacy systems and they put in, like, the middleware that where they keep Delta update the legacy systems. And so that enables them to have the real-time data to be able to respond to transactions in real time. So I think it's by marrying the fintechs with the legacy, the banks, that we're going to have the best of both worlds. And one more comment on that before I hand back to you is, one of the things that I see that's even more exciting is that what ends up happening is this is like the first step on a payments modernization journey, because banks can't do this as a big bang. Like, they can't off their legacy systems in one go. But what I see is this, once they commit to the instant payments journey, this really opens up a whole new set of doors, because these fintechs often are instant payments through a payments hub. And so now it's not only instant payments, but, a customer has choice. It's like a single API connection. And through that API connection, you can do instant payments, you can do push to card, you can do wires. and financial institutions can see all their payment transactions in one place, so they can, see like how are people using the payment transactions. Do they have a preference? They can look at all their fraud across all their payment vehicles, so they can detect trends. Maybe they start doing a consortium view of fraud detection. Like, it opens so many doors. And then after that, there's like, well, now you can start adding microservices, right? So anyway, this is probably like way beyond the scope of the call, but for me, it just gets really exciting, because this is as the path to help financial institutions off of those legacy infrastructures that have been so frustrating for so long.
Yeah, I love how you talk about it, because that shows that how you care about this. And you are absolutely right, because in my opinion, every fin company has to become a fintech company sooner or later. Again, it's not something that it's a choice that, okay, I see my legacy system and I'm not going to innovate, and this is what it is, and I keep the status quo. Your clients are going to leave you. You have to innovate. And yes, maybe in Europe now the regulator is forcing you to open doors for the instant payment, and through that API, a whole new world opens up with it. And then you realize that there is more to tech than just instant payments, which is a good thing. But I can see that the bigger banks are really struggling with their legacy system, because it's just not capable to connect with the new systems. The APIs often they just don't communicate with each other as they should. So what I can see that the banks are already in a somewhat of like a to become fintech. And this could give a good opportunity for the witty little fintech companies to serve those larger competitors, but as well as to maintain their own independent offering in terms of services, software, innovation, and whatnot. So as you said, it could be a really nice marriage between the traditional banking systems and the new fintech innovations, if they know how to work together, and then how to maximize the strength points from each. So let's jump into the next question. What do you think? Will open banking and instant payments replace cards? I would say yes, but again, I'm very curious about your on this.
Well, I know banks make so much money off of interchange. So, banks want to lose their revenue. I get it. I know I came from Bank of America, Wells Fargo. Like, I know how important interchange is. From everything that I've heard, I professionals all across the industry. And so far, now, right, we haven't really seen cannibalization of current revenue. Like, especially, if you think about the way people use card products, is they're basically deferring their expense as long as they can. So, I don't think instant payments is really it's not a good replacement for credit card if you love your credit card. But I think instant is a really great replacement is for checks, right? Mm-hmm. We're still dealing with huge amounts of checks, and check fraud is one of the fastest rising areas of fraud that we're seeing today, or especially in the US. And, need to be doing that. Instant payments is a great experience. One of the things that people like about their checks is the ability to, information, like you put a piece of paper with the check and you put it in an envelope and you put it in the mail, additional data that goes with it. And I think with instant payments, because of the rich ISO 20022, the financial Rosetta Stone, the messaging that goes with it, it's a great replacement, because now people can put those notes that they really want to put with checks. So that would be an area that I would focus on when you're looking at redesigning your systems. And the other area is we're not ready in the short term for ACH, but I think cost is account after you account for any systems changes. The cost is pretty similar to today, and it's definitely less expensive than same day ACH, but it can be a really great alternative to that, because of the ability to do single transactions and do the analysis, do the fraud review, helping with, looking things up after the fact. So it's much easier to analyze one transaction in a silo versus trying to have to sort through a whole batch file to figure out what's going on. So to answer your question, I don't see this as replacing credit cards anytime in the near future.
What I can see that obviously Visa and MasterCard is really, really involved in the instant payments, as well as they're involved in everything else, because they need to diversify away from card payments, because eventually card payments, like the fact that you're having a plastic between the different, is going to disappear sooner or later. The function behind the card still stays, which could be, protection mentioned the chargeback, the security, the extra layer of checks, and as you said, the interchange, which is happily enjoyed by every participant in the card processing. In my opinion, for example, it's still beyond me how you guys are still using checks in the US, because in Europe the checks are so
What is that?
However, we are very strong on like debit cards. We don't really have that much of a credit card, but a debit card, whereby there is no function of the debit card. If you have an account, you've got money on it, and you only use the card to pay and use those funds which are already accumulated on your account. So in this way, I do see that open banking and instant payment could be a really nice alternative other than showing your card and using your card. The thing is that a lot of people don't know, however, is that that allows the opportunity for chargeback. And since it's instant, if someone managed to do any fraud, it's instantly done and it's very hard to reverse later. So cards were very popular for increasing the trust towards online payments at the early times when the internet started to boom. And the cards played a significant role in increasing this trust, because they said that use your cards, pay online. If you don't like it, you can always dispute the transaction. You can always force the merchant to get the money back to you. And more often than not, the dispute was always beneficial to the customer to enhance the trust even further. And yeah, your merchant had to swallow the frog, right? This is what it is. If you want to go online, sometimes you don't win. And with this, now the power goes back to the hands of a merchant who sees the money immediately. There is no opportunity for dispute. Now I've got your money. There is no rolling reserve. No one is holding the money in the middle until because something happened. No, you paid me. I've got your money. You got your service. Goodbye. So in this way, merchants now can get back the power with the instant payment of, yes, I did service, I provided the product, I get paid for it, and that's where our business relationship ends. And there could be no lingering of a chargeback and a dispute 6 months later when transaction occurs. So in this way, I can see why merchants and obviously banks are pushing this other than card payments, because it's definitely benefiting them.
Yeah, no, that is a factor. So, you highlighting that because of the chargeback, because these are, like you said, they're instant, they're irrevocable. Like if you said, oops, I need to do that. That's where the payee confirmation is. It's really nice that in Europe, they have that payee confirmation. So when you're doing your payment, you can see, is this really who you meant to pay? And that'll help combat kind of like some of those social engineerings, because I thought I was paying Jane, but it actually went to fraudster bad guy. But I think that's one of those things, is that because you don't have that chargeback now, you're kind of banks in the position of like, you're not obligated. Like if it says, hey, if an institution says, oops, that should have gone, or a customer says, oops, that shouldn't have gone. There is ability to ask for the return of funds, but the other financial institution isn't obligated to return it. Mm-hmm. And so now financial institutions have to decide what's their policy on that. And then there's kind of the liability, thing in the courts right now. I can't remember if it's already been decided on, too many things going on, but the idea of when there's fraud, like who owes liability? Is it the merchant? Is it the bank? Is it the customer? Like, where does that sit? And definitely as world migrates more towards this instant payments landscape, there's going to be a lot more questions about how are these things handled. But I think the nice thing about instant payments is that it's really a safer payment product than what we have out there today, because instant payments, they're a push payment. So it means that a customer has to be in their banking experience in their bank account authorizing that push. So your areas of vulnerability in that transaction will be social engineering, like we've got your son, he's kidnapped, those schemes are, right? There's all these different schemes. There's the love scheme, the kidnapping scheme, whatever. But anyway, so if you're in your account and you're pushing that, in a transaction, vulnerability, we can, like banks do their best to stop people from doing things like that. But, and then account takeover, if somebody takes over your account. But the thing is, those two vulnerabilities apply across all the payment types. The nice thing is that if somebody has your account number, they can't pull the payment out from your account for fraud, which you see with ACH and wires, is that somebody gets your account information, they can get that payment. So the trick with instant payments is ensuring that you have those strong layers of defense up front before that transaction happens. And, you combat a little bit of that social engineering with maybe putting those device and persona rules, like is the payment pattern that is normal for this customer at this time of day. So there's a defense that you can put in there to kind of combat that. And the other nice thing about instant payments is because it's real time, they're going to be black and white. It's like customer meets our risk appetite and we're okay approving that transaction, or we're concerned about the risk and we're going to just decline that. So when you decline, you can, I guess, route them through another channel, or you can just say service down, or whatever your choice of language is, right, to decline that customer. And so that can give you a greater confidence. So it's really like the many layers of defense that I think, at least from that perspective, in good hands. But to your point, from the back perspective, that is an area of kind of, might say.
Yeah, interesting that you mentioned, because actually quite recently there was an order from the regulator, it's quite precisely, it's the 7th of October in the UK, when it declared that the financial institutions need to take shared responsibility if a fraud occurs. And obviously everybody had a panic in the industry, because they said that if there is any fraud taking place on my platform, I need to invest better fraud tools. I need to pay attention extra to the compliance, even more that they are already doing it in a very strongly regulated environment like Europe. And on top of that, the fraudsters take no responsibility, because they say that, oh, I'm not stealing from anyone but the big bad banks, and that's why it justifies their action, and they're more likely to commit the fraud again and again. So that also incurs a lot of obviously with the instant payment, there had to be some kind of decision like this made, because otherwise who's going to take the responsibility for all of those lost or stolen or fraudulent transfers, which is now taking place instantly. So that's a very nice addition, that yes, instant payments, but in the same way, the responsibility on you, dear financial institution, in case something goes wrong, you have to fork it out from your profit as well to cover that. I think up to £85,000. It was supposed to be more than £400,000, but the financial institution said that no, it's bankrupt me. So they agreed in a maximum of £85,000, but it's still a significant amount of money. And then we'll see that more enhanced compliance procedures, which is going to be obviously burdening the transaction of the normal, good as well. But that's another question. So other interesting part, batch payments are on a different system than individual payments. And actually, this is the question I got from my clients. And they said, does the system need to change? And will the reporting change as well? As we are no longer just clearing it in batches, but because of the instant payment, it had to take a think about that.
Yeah, I mean, we touched on this. So just to, I guess, down more clearly, right? Legacy systems were built on the main, and then the reason why they had the batch processes. So the way the batch processes work is they collect the data over the course of the day or at specific intervals. They'll take all the information and then they'll process it. But you have systems like credit cards or debit cards, right, that are time. And so banks have a way already today to process that. So usually there's a separate system or separate ledger, which is handling the real-time transactions. And then during those batch updates, they marry those systems together. These batch processing systems are an impediment, but that's why when we were talking about fintechs, right, these third-party solution providers, these fintechs, banks kind of do that migration. So they help them with that middle layer, having those real-time information about the customers and the data records, and they're able to transact those payments in real time. So processes, I think, are going to be migrating to this what do they call it? Continual reconciliation. Our processes will eventually change to be 24/7. But right now, it's a slow migration. Banks don't do anything fast, which is good. Working with third-party service providers, you can have that real-time data, those real-time payments, and then start modifying your operations. So initially your operations can stay pretty similar, but you're going to want to start looking at those ways that you can provide. And now that you're empowered to offer services in real time, like you're going to start looking at your other systems and saying, how can we improve on these? How can we get more efficient internally? How can we serve our customers better? How do our resources get redeployed? And I think this is, again, this is a really great journey, a great place to be. And it doesn't have to happen overnight. And there's people like, Viktoria and I can help financial institutions navigate this journey to get from this legacy infrastructure into this real-time environment at a pace that's comfortable, that aligns to your risk appetite, and all the balances. I mean, everything, all the dotted and all the T's are crossed. So to do that real-time and instant transactions in today's environment with those legacy systems. So there is a path to success, and it's not as expensive as you're expecting, and it's not as slow and as lengthy as you're anticipating. I know banks are thinking, oh my gosh, legacy infrastructure, it's going to be a multi-year project and it's going to cost me millions of dollars. But I'm just letting you know right now, I've talked to financial institutions, I've talked to third-party service providers, it's not the behemoth that you're afraid of. There is a friendly, accessible path to success. And I was going to say when you're ready for it, but given the deadlines that we're facing, it's not a matter about you being ready. It's just okay, you got to do this. Find people that can help you on your journey and make it feel comfortable for you. It's not a scary thing. It's a very exciting thing that'll open so many opportunities for you.
I agree. What I used to say is that it doesn't a lot to actually plan properly and have in place to over what you do, but it can cost a lot not to have it when the deadline hits you. And that's when you start making panic decisions and all of those bad decisions, which can really long-term affect your whole operation, your productivity. And that's when the legacy system is just not communicating with the new software. And then we've got, guys, 2 days to fix this, so let's order pizza in the office and sleep in because we need to figure it out. All of those panic last minute moments. I agree with you. It looks scary, but it doesn't have to be if you know what you're doing. But you need to know what you're doing, basically, for all of that. Yeah. Let's see the question. Instant payments are 24/7, 365. Does this represent a challenge or not? In my opinion, again, it's a yes and a no, because there are already 24/7 available services. For example, the ATM service or the customer service or the fraud has to be around the clock. But this, what do you think, in your opinion? Would this put an extra layer of difficulty to mainly smaller financial institutions? Does it really add to the cost, or is just not knowing what you're dealing with and that's why you're panicking?
Yeah, exactly. It's more the matter. What we're seeing is they've already been, handling by 7, like you mentioned, the debit cards, the ATM cards, right? Credit cards, ATMs. So banks have operational processes in place. So it's just a matter of revisiting, is there anything that needs to be adjusted? Instant payments is safer method of fraud. But the other thing is there's controls. So if you're not confident doing overnight instant payments, maybe you dial it back. Maybe your limit for overnight is a lower threshold. Maybe, there's a put in place. I think, it was interesting. I was talking to somebody about the PIX implementation, and they were seeing, crime happen overnight, people getting robbed at gunpoint to say, hey, show me your phone, hand over your phone so we can do a payment transaction, right? And so they put rules for the nighttime processing where if you're out of your zone, like your home's maybe your office zone, right, based on geolocation, they would have extra control. So basically you would have to re-authenticate yourself with your ID, blah, blah, blah. So to be really desperate, to be a payment, you'd have to have all these hurdles. So bad actors aren't going to want to go through all those hurdles to get the money. So, there you can just put rules based on time of day or based on geolocation. So that's about the 24/7. But what we're seeing so far in the US is that people are just using their current with slight modifications. But the idea that going forward in the future, we might want to have continuous operations, reconciliation, consider continuous settlement. But it's not a requirement now. It's just one of those things that as you look at your business processes and it makes sense and you want to upgrade for better experience, that's something that you can do, but there's not like a sense of urgency to like build up massive staff or, change your processes. It's more like minor tweaks to what you're doing.
Yeah, I agree completely, because a lot of companies, they don't even notice that they are already giving this service, but now they are forced to do 24/7. Now it's the which kicks in the what if I cannot, but you're already doing it. It's really just to see it in a different perspective. And yes, there are a lot of important for security. When we are talking about global payments, and now every company is online, and you're no longer a brick and mortar store serving the local community. As a bare minimum, you've got a website where you serve the whole world. So it is time that everybody is updating their customer service and service level around the clock, because this would be a necessity with or without instant payments anyway. Maybe if you're a financial institution, for customer action, it is just a bare minimum that you need to do. So I agree with you on this
Well,
point.
and
Yeah.
just again, that like a good point you're bringing up, and they do have like what I call it, the follow the sun models, is that you can, like, if you have the internal resources, right, you can outsource to different support you to go over the 7. So if that's something that you want to do, there's also resources available to do that without augmenting your staff. So there's approaches that you can take to do that as well. So I think that's a good point.
That's right. Time is flying when you're on, and we are already talking for 52 minutes. And we already have some comments here from the audience, and they are saying thank you for this webinar. And we also have an expert in UPI who was commenting us. But I don't really see any specific questions, so I just would like to encourage the audience to please hit us with because we're gonna try to reply to all those questions that you bring us up, other than we bring to you. But since I don't really see any questions, maybe we can follow up with the next question. Which
make sure we leave time to put the little barcode in case anybody. So maybe one more question, and then have the barcode background or something.
Sure. I think we will have enough time for one or definitely like 2 questions for sure. So see the next question that we have. So does the system need to upgrade to verify immediate funds availability? And also there is a question around liquidity management as an issue around it. What do you think about that?
Yeah, so obviously talking real-time payment, you need to have real-time funds. So instant payments works on the good funds model, and there's funds held at a central location. So every financial institution will have a pool of funds located at their real-time rail processing unit, whatever model, Europe or US. So in the US, we have the Federal Reserve. These pools of funds need to have certain thresholds. When that has been drained dry, there's no more transacting. So even if a customer has enough funds to do a transaction, if you don't have the funds in that account, that customer is not be able to transact, and that transaction will be declined. And so one of the things that financial institutions now need to do with send and receive is monitor how much funds are in there. Like, so how many of their customers are sending money, how much money are they receiving, and start doing a little bit of forecasting to say, we need to ensure there's sufficient funds there. So you might need to shift funds in there when you're having a high transaction day. And so there's the cool thing is that because for all our financial institutions, that can be a bit of a bear to, have some monitoring that. And so there's funding partners. There's banks that are with your liquidity management. So you just designate them. I mean, they'll have some sort of maintenance fee for doing this for you. But this is the same as like with correspondent banking today, that somebody else is handling the funds for you. And so they would, so typically these liquidity partners or these funding partners will have a number of financial institutions that they'll be managing for. And so that's kind of like a fund. And so what they do is they ensure that there's sufficient amount of funds across all those financial partners. So maybe one financial institution will be having a lot of transactions and the other one will be having less. And so it just kind of balances out that. So if you don't have the resources today to really manage that, then you want to look for a partner that can help you to manage those funds on behalf.
Yeah, as with everything, you're not alone. So there are like specific providers for specific purposes, for example, for this liquidity and as well. So yeah, there is out there. Javier is sending us amazing questions. Thank you so much, Javier. One of the questions he has: how can we promote instant payments in every country? And also he's asking that instant payments have a great impact in financial inclusion, and why instant payments is not a main topic in the international agenda to empower users all over the world. And I think these two questions belong together, so that's why I mentioned it together. What do you think, Marcia?
I feel like that's all kind of like the lot of this, like in the SEPA mandate, like there are pillars that they were mentioning. I mean, they're really that they talk about ubiquity, affordability, security, and innovation. And a lot of these mandates are just designed to help the average person with financial inclusion and managing their finances and making it affordable. Could they be doing a better job of the messaging? I would say yes. I mean, I guess the question is whose responsibility and what channel does that go? Is it financial institutions to really pump up the message and help that out? So whose responsibility? Is it the government? Are people going to be really excited when the government says this message? I think the message really needs to come from the financial institutions that you trust. Like they're the ones who are closest to that relationship. And if they don't offer the services in a way that's easy to use, like they could, they go, hey, guys, this is a great tool to help you manage your finances and pay your bills. But if that customer then goes to their bank and they can't figure out where it is or how to use it or how it works, it's not going to get adopted. So I think it's really on each individual financial institution to kind of pump a message and help their customers understand it and make it visible, make it easy. So that's my perspective. I don't know, Victoria, do you have fun?
I agree with you completely. And usually the people who motivate the most out of the change are the biggest flag carriers and way. So in this way, I'm expecting a merchant to change from card payments to instant payments because the money is in my pocket quicker. No one is holding on to that. There is no chargeback. It's a win-win-win for me. So obviously, I would encourage all my customers to pay me with instant payments. Therefore, I demand this from my financial institution. So I think the merchants will definitely lead the way when it comes to mass adoption because they will be the ones who demand this from their financial institution as a service. So that's amazing. We are running out of questions and time, but I would like to tell everyone that we are planning a very this is the QR code. So I would like to reveal a big secret because we are planning a series which is going to be a proper course with Marcia about instant payments and other payments, tricks, hints, and secrets utilizing her.
My vision of the journey, the payments modernization journey, starting with instant payments, then your payments hub and your microservices to the getting off of your legacy infrastructure. So we're going to have a whole course on helping you make that journey.
And I'm so excited about that because this is the topic that we can talk about for years and years, and every single sentence is revealing something which is unique and so beneficial for even the everyday activities. So it's absolutely amazing. Thank you very much for the questions, and thank you for everyone who attended. I would like to encourage you to follow the Soltesz Institute for updates and sign up, please, to receive the news when the course is coming out, and obviously just see what are the existing courses. If you need more help other than just the training, this is what we are here for with Marcia. So we have a little joint venture of helping you with any kind of instant payment needs or any kind of payment consultancy requests that you might have. She has an amazing experience and joins together with PSP Angels. I think that there are a lot of opportunity here to optimize your payments and banking flows. So please do feel free, reach out to us and follow up for more news. Definitely sign up here in this QR code to receive more news. Thank you so much for everyone who attended. Thank you so much, Marcia, and really look forward to have the conversation with you very shortly again.
Yeah, it's been quite the pleasure, Victoria. Thanks so much for the opportunity. It's a great conversation.